Hello and welcome to Thank God It's Friday. We are in a conversation with Mark Matthews, the head of Asia Research at Bank Julius Baer. Mark, thank you so much for joining us. While most of the analysts have been talking about how the Nifty's valuations are looking very rich, they're also saying that they're not very frothy as yet. How much headroom do you think is available for a further rally?
I think on a valuation basis, the market is no longer cheap. It is not at its historic highs either, but I wouldn't argue in favor of the market going up purely based on valuations. Where I think the market can continue to go up is basically because the inflows that we've experienced from retail investors into domestic mutual funds, I believe that will remain strong, including through the SIP plan. Last month, there was about $2 billion that flowed into domestic equity funds, and that more than offset the foreign selling. So, to answer your question, on a valuation basis, I don't think the market will rise, but on a liquidity basis, I think it will continue to rise.
Mark, you were talking about the local domestic inflows into equities, but after turning strong buyers of Indian equities in the January to March period, foreign funds have sort of turned net sellers of Indian equities in April. What do you think could be spooking foreign funds?
I think it's overall questioning of the so-called reflation trade, which was the most popular trade since approximately the time of the U.S. presidential election last November. And that trade really favored commodities and emerging markets. Although the timing was coincidental with the U.S. election, I believe the origin of this trade was actually China. And China was last year injecting a tremendous amount of liquidity into its economy. They've started taking that away, and I don't really understand the linkage between that and the sudden fall from grace of cyclicals. But that is what's happening, and emerging markets are linked to cyclicals.
Mark, if we take the Indian corporate earnings as a ratio to the Indian GDP, that ratio is the lowest in 10 years. Now, over the past 2 to 3 years, we've had a lot of analysts say that we will have double-digit growth, about 15 to 20% year after year. That has not come to be so far. Will this year be different? And if so, what is it that's going to drive earnings for India?
Well, so far the earnings that we've seen have been just fine. In other words, I have not seen analysts revising down their forecasts a lot. Neither have I seen them revising their forecasts up a lot. By the way, that's exactly the same in most other emerging markets. China, for example, we are seeing the earnings coming in just in line. What should cause the earnings to be more robust for the overall market is the banks and commodities. The base effect from their very poor earnings this time last year is what should produce double-digit earnings growth this year.
Mark, we're expecting details on a new framework for the resolution of the big bad debt problem in India. What is your view on state-owned banks in India, especially in the backdrop of these regulatory changes?
Well, it's positive because, as you rightly point out, the cabinet and the prime minister both have approved these amendments, which will allow the RBI to sit down at the table with the state banks and their defaulters. And I believe that they've also made, I don't know if you want to call it a promise or a guarantee, but they've made something like that to the management of the state-owned banks, that there won't be any witch hunts against them in the future if these if these NPLs are written off at prices today, nobody can come back and accuse them of having accepted too low of a price, which is what's happened in the future. So I see it as being very important. Also, talk about a bad bank being created is very important to take these non-performing assets off the bank books. Yes, it's a big step in the right direction.
A growing number of voices in the mutual fund industry are of the opinion that the larger cap stocks offer a higher return potential as compared to stocks which have a smaller market capitalization. Are you also of the same opinion?
Very much of the same opinion. The mid-caps are now extremely expensive in India on about 25 times price to earnings. The broader market is around 18. But yeah, so definitely I think the mid-caps I agree with those mutual fund managers, overpriced.
So if I were to ask you, what are the themes or the sectoral plays that you would be looking at when it comes to investments in India right now, considering the stocks are where they are?
Well, we talked about banks, but the logical conclusion to that conversation that we just had is that banks will benefit from a more speedy resolution of their non-performing assets and the setting up of a bad bank. I believe they are already more than halfway through their write-offs anyway because of the efforts of former RBI Governor Rajat. The other thing that interests me is the information technology sector. And if you look at stocks like Infosys, they're down so much, I think about 30% over the last year. And that's because they've been through a very hard time with, of course, Trump threatening to take away H-1B visas and the relative strength in the rupee, and banks are their major customers around the world, and they've come under so many pressures. But I feel like all of those things are gently abating now. The H-1B visa issue will remain somewhat of a hot potato, but I think it's definitely in the price. Rupee I see as more stable than appreciating. And then the banks around the world, they've already gone through such a hard time, but we've seen in the likes of HSBC and who else has reported recently, DBS here in Singapore, banks generally around the world, the big banks have been reporting good results, so I think they'll have a little more money to spend on IT. And then, these stocks in IT in India have come down to only around 11 times. And in the case of a company like Infosys, you're now looking at a recurring dividend of about 4%. So long-winded answer to your question, IT looks interesting to me.
All right, Mark, I also wanted to address commodities. WTI crude dropped below that $45 per barrel mark for the first time since November. So do you really think that commodity space is looking a little bit overheated now, and even the spectacular rally that we had seen in metals seems to have hit some sort of a speed bump now?
This is, I think, the very interesting topic of conversation is the commodity sector, because it's had such a sudden fall from grace. I'd have to say we need to separate the commodities. Each one has their own special supply-demand dynamic, but we don't have the time to do that. So I would just say there's oil and there's everything else, to be very simplistic about it. You did mention the oil price, about $45. I think it's close to capitulation. I don't see it going down much below here. The reasons that have driven it down are the idea that non-OPEC countries will start increasing their production. The US has already been increasing its production quite aggressively. But I think outweighing that, or at least not necessarily outweighing, but the counterforce is that global economy is actually quite robust, and demand is quite robust. Now, the other commodities, to mention them briefly, they went up a lot. Iron ore, copper, steel, nickel, they're all now collapsing. That I find more mysterious, because we don't really know why they went up as fast as they did back at the end of last year and the beginning of this year. I don't think any analysts were predicting it. So now that they're collapsing, we don't entirely understand it either, but the answer must come out of China. And all I would say is that when I look at the tightening that has gone on in China, that's being blamed as the culprit. It doesn't look excessive to me, not excessive enough to warrant these big declines in prices. So I'm not recommending to step in and buy these commodities producers just yet, but I would say that even at prices that we have today in things like iron ore, companies like BHP and Rio are tremendously profitable. And I do think the next step, will be to look at buying those. Not just yet, though.
Mark, a word on the French elections. Polls do suggest that Macron is in the lead for now. In either case, how do you expect the European markets to react once we will have the results this Sunday? And if you keep the French elections aside, what are the other global events that could lead to, give a direction when it comes to global equities going forward?
The French elections, right now, the polls are showing that Macron is in the lead by 20 points, which is a massive, massive lead, much wider than the Brexit. But we were also being told that Hillary's lead was that wide, and look what happened. So the problem is that these numbers may not be accurate. We just don't know. That's all I can say about it, really. Of course, if he wins, you're probably going to see a continued rally in the euro and the European markets. If Miss Le Pen wins, the reaction, at least initially, would be quite the opposite. But I would say, even in the unlikely event where she is president, she will not have the power to, on her own, say France is going to leave the European Union or France is going to leave the Eurozone. For such important issues, they would have to hold a vote. And I strongly believe the French would not vote in favor of either of those. So, there would be a sell-off on her being elected, but it might be quite short-lived. The other risks out there this year, you've got, of course, coming up after the French election, the German election later this year, and then the Italian election will be sometime after that. Those will be also significant events. I think also the ability for Donald Trump to score a few victories, particularly on the domestic front. So watching the Senate approve or disapprove of his second attempt to reform healthcare, that'll be critical. If it fails, it'll show he can't seem to get things done, and that will further cause people to question the reform prospects in the United States. But I would say, generally speaking, that things still look pretty good to me in the world today.
Mark Matthews, it was a pleasure speaking with you. Thank you very much for your time.
Thank you.